There are four factors that brought down the US economy: housing, gas prices, stock market, and unemployment. Talk about housing first. The internet boom of the late 90s resulted into unprecedented economic growth. Consequently, the prices of real estate also went up sky high. But when the internet market has become oversaturated, the bubble burst. But the prices of real estate just dipped down a little bit, but still remained high. Lenders and finance institutions continued to finance the purchase of real estates. Construction firms continued to build subdivisions. The advent of deals that sound to be too good to be true, like the zero interest, which eventually result into unaffordable monthly installments in the years that followed. Also, the construction firms continued building of subdivisions resulted into oversupply of real estate. And when the bubble burst and people started defaulting payment and losing their homes to foreclosure and stopped buying houses, there were oversupply of houses and there were a lot of ongoing construction projects. Consequently, these construction firms could no longer finish their projects as there are no buyers and had defaulted payment of their loans from the banks and financial institutions who financed their projects. Now, the gas prices, the OPEC, which is an organization of petroleum producing countries, wanted to raise the prices of oil. Now, take note that during the boom, prices of oil is affordable and people clamored for big vehicles. They are nostalgic about the days prior to 1972 when American cars are huge and big. But the war in 72 had resulted into the entry of smaller cars into the United States. Now, at the time of economic prosperity, people wants to go back to those big cars, and American automakers built big SUVs, trucks, vans, and other big vehicles. When OPEC now decides that it wanted to raise the prices, they slow down the production of oil. Now, some people may disagree with that, but that's the belief that OPEC controlled the prices of oil by slowing down production. When there is less supply and more demand, prices went up. And when the prices went up, people no longer want to buy big, and American automakers are not flexible enough to respond to the need of the market. Consequently, 2 years of inventories of big trucks, vans, and SUVs are sitting at dealerships at vacant parking lots that they rented. Now, the makers of smaller cars think that, okay, this is our chance. Since people stopped buying big vehicles, we're now selling small vehicles. So they made a lot of these smaller vehicles. But then, the economy so deteriorated that people don't even buy smaller vehicles. And consequently, a lot of surplus of small vehicles also sits. Another factor that affects the car industry is the fact that financial institutions who suffered losses in the housing collapse are no longer granting loans for the purchase of cars, and perhaps 6 in every 10 vehicles that are purchased at dealership are financed by car loans. Very few people would be able to buy cars on cash. Now, the third factor is the stock market. Now, these banks, construction firms, suppliers of construction tools and materials, and providers of services like janitorials, engineering, and others, when the economy slows down, they also suffered losses, and some of them got bankrupt. When they incurred losses, their stocks also deteriorates. The value of their shares of stocks deteriorates. Shares of stocks are traded at the stock market. This is where investments are made by the common people in their 401ks and other retirement plans and investment plans. Fourth factor, which is massive unemployment, is actually a very natural result of these economic setbacks. When firms are bankrupt, people lose their job. Now everything is a cycle. When people are not working, then they will not buy goods. That will contribute to the problem suffered by retailer stores and manufacturing companies. They can no longer sell their goods because there are no more buyers. There are no more buyers because people are unemployed. This is a very complex economic cycle, and so many experts claim to have the solution. But the truth is, the economy has a will of its own, and the government can only do so much as to stimulating the economy or providing some guidelines. So it's very wrong to put all the blame on George Bush. He has done his share of trying to stimulate the economy. Perhaps he made wrong decisions. However, it's not entirely his fault that the economy has gone this way. Now, another factor that aggravates this whole thing is the government attempts to rescue the economy by introducing more money into the system. Because what happened is that the government asked the central bank to print more banknotes in order to back up the bailout amount that they have granted to certain industries. Now the principle of the banknote is that it should be supported by gold reserves, or if not, by actual assets or accrued earnings that are already due and collectible by the government. But what happened now is that the government does not have that guarantee to the central bank, and it has asked the central bank to issue banknotes guaranteed only by government bonds and treasury notes and other forms of promissory notes. Now this will result into inflation as more banknotes are introduced into the system without corresponding support. When a banknote is inflated, it loses its value and its credibility. So what could have be the buying power or the purchase value of $1 today may be the equivalent of what will be $3 or $4 tomorrow. Now sadly, there is no solution in sight to the present problems. However, the economy is so complex that it's very hard to make accurate predictions of what lies ahead. It could be that America is heading to its doomsday, that its glory days are over, and like what the Russian professor has predicted, like Russia, the United States will collapse, and consequently the states will be asking to be separated from the Union, resulting into the collapse of a great country. However, it could also be that the solution is just looming ahead a few months from now, or a year or two or three from now, that something big will happen, like the internet boom of the 90s, and consequently revive the US economy. Now these government projects that created jobs are just temporary remedies. Like the Hoover Dam in the 30s, it provided temporary solution by providing jobs. However, it's only good for the duration of the project. The economy is still bad and still continue to be bad. If and when, however, there are factors that will reinvigorate and revive the economy, you have to remember the principle in physics that for every action there is always an opposite equal reaction. This would mean that the vacuum that has been created by the slowing down of the economy results into high demands of product and economic activity if and when we survive this crisis, and that will mean economic prosperity.